Hello and welcome to the second episode of our technical analysis course in the channel G-Trade-A. In this episode, we will compare two main methods that usually traders use to analyze the price and the markets, and we will discuss about their advantages and disadvantages. These two main methods are fundamental analysis and technical analysis. Although there are some other methods to analyze the markets, but they are mostly derived from these two main methods. So we will just discuss about fundamental analysis and technical analysis in this lecture. Fundamental analysts use financial ratios like company's growth rate, financial statements, P/E ratio, P/S ratio, and this type of data, and also economic parameters like inflation rates and interest rates to analyze the markets and find overvalued and undervalued assets. They buy undervalued assets and they sell overvalued assets. Fundamental analysis is usually used for long-term investment decisions, and the biggest advantage of this procedure is that it's more reliable because it's based on real economic and financial calculations and predicting future returns of assets. And because only a minority of traders can use it, you will have a big comparative advantage if you are able to do fundamental analysis. But there are some disadvantages for this procedure. It's really time consuming and usually teams do it. However, these days there are some robot assistants and computer algorithms that can help you to do the fundamental analysis individually. And as we discussed, it's usually used for long-term decisions and it requires long periods to see if an analysis is failed or not. Additionally, fundamental analysis does not give precise entry and exit points. For example, you may find an undervalued stock in the market. You buy it and wait for market to correct itself. But unfortunately, you see that the price goes down and down, and then the market starts to correct itself. You see, if you had waited for more time to buy that undervalued stock, you would have made more profit. But fundamental analysis does not give you any help to find the best time to buy and sell. Also, there are no perfect methods available for some assets. For example, there is no perfect fundamental analysis method to analyze the cryptocurrencies fundamentally. There are some procedures, but they are not perfect and you cannot rely just on them. Okay, and about technical analysis, in this procedure, we use charts to analyze the market. We analyze the movements of prices and the volumes of markets and some indicators that are created using this data to analyze the price movements and predict the future. There are two assumptions for technical analysis. Firstly, we assume that past events and patterns will occur again and again in the future. And we also assume that price charts include every information related to an asset. So by analyzing the past chart, we can predict the future. And also there are some psychology concepts that support some of the technical analysis methods. And using these methods, we can analyze the sentiment of the market. These are the advantages of technical analysis. This procedure gives us precise entry and exit points, and we can use this method in different time horizons, and we can use it in intraday trading or long-term investment decisions. This is comparatively easier to learn, and the risk management procedures in technical analysis are also easy. You can use just a stop loss and manage your risks. However, in fundamental analysis, the risk management procedures are more complex. But there are some disadvantages for technical analysis too. Even though it's easy to learn, but it requires lots of practice and experience to make profit and use it perfectly. Another fact that sometimes confuses traders is that a technical analysis strategy may work on a special asset during a special period, but for another asset or during another period, it may not work, and you should optimize your strategy for different assets, and you should update your strategy constantly. And finally, to answer which one of these procedures are better, they are both good and they have their own pros and cons, but technical analysis is more crucial to learn because you can use pure technical analysis to analyze the market and make profitable trades. But as a fundamental analyst, you should also use technical analysis to find the best entry and exit points. However, it's the best practice to use fundamental analysis to find undervalued and overvalued assets, and use technical analysis to find the best time to buy and sell. Okay, that's enough for this episode. Thanks for watching. Hope to see you soon.